Alright, what's up, boys? I'm gonna do a little trade recap and then just give you guys some sauce. The main thing is I want to talk about is just keeping your trading simple, right? I'll delete everything that I have on here. So I'll go back to market open. Today is a little different because we had CPI. I know, but coming into today, looking at the 4-hour chart. What are we doing on the 4-hour chart? Clearly just expanding higher. Clearly just expanding higher. We haven't opened up this 4-hour gap yet. There's no reason to come back and test this, especially with how this candle is moving right now. There would be no reason for us not to just come up and take previous week high and all the rest of these highs that are just resting up here, right? And with knowing that, why would we ever want to short down to this data low? It's a good draw on liquidity. It's a data low. Data lows get hit a lot. But what I want you guys to know is that why would we want to target a low that swept another low, right? And that was like a really clean sweep, a 1 minute rejection block, all of that kind of stuff. Perfect turtle soup. Why would we want to target anything here? Why would we not want to just target previous week high? If anything, it's closer anyway. So what I was coming in today looking for was just an A plus light bulb long setup. And the thing is that looking at this 15-minute chart, it's just hard to gauge anywhere where we can get a plus long setup. And what I was really looking for was for a plus short setup to fail down to this data low, and then I would just take a continuation long up to that. But we never really got that. It was kind of just choppy price action. This would have been perfect if we ended up failing this short like this, and then we ended up getting closed like back through here, and then getting the continuation higher, but we never ended up closing back through this area, and that's exactly why there was nothing in the market today. But I'll get into how I caught pretty much the low of the day yesterday. Not the exact low, but I caught pretty much the low, right? Coming in daily time frame, right? Perfect. We have these two daily opens that create a volume imbalance. Perfect. We're just trading inside of it. We're clearly rejecting out of it on every single time frame. We have a 4-hour low that we sweep out. Perfect. Now zoom down time frames. What do we get? We get a nice displacement through all of this. The next close. Boom, we close through both the 15-minute gaps if that's what you want to qualify. If that's how you want to qualify your displacement. Now, all we need to do is catch a continuation. Boom, perfect. There you go. 0.5 of the range. 5-minute order block. CISD retap. Breaker block. Everything you could wish for in a setup. Boom. Take your entry. My entry was like right here. Run whatever stop loss you want, and it's just obvious. This is an A plus light bulb setup. We're clearly bullish on the higher time frame. We already manipulated in the daily gap. We don't need to go back down there. We already have this low set in. There was no reason really to come back down here, sweep these lows. We sweep this low and look at ES at the same time. It actually swept that low perfectly too. Perfect. And then we end up, boom, displacing higher back to where we are now. And yeah, I just want to keep it, I want you guys to just keep it really simple with your trading. You honestly, if you wanted to, you could just look at prominent draws, just previous week high, previous day high, and then previous day low, equilibrium, both those. But you want to make sense out of your trading, right? Why would you want to take a short down to this low when it swept out other lows and it's just a low that we set in? Why would the market want to come back down here? That would be a protected low when you have all these stacked ass highs that are just built up now. The 4-hour time frame, look at this shit. Look at all these stacked ass highs. Perfect. Perfect draws on liquidity, and that's what we're going to run first, I guarantee it. But yeah, it's super easy when you kind of get an idea of what the market wants to do, and this is also another thing. The market expanded, let's see, from the open, it expanded 400 points, right? Are we really going to expect the New York session to continue higher just like immediately? Not really. I mean, it could, obviously, but we're not going to expect it to just rip up. We can expect some sort of consolidation, which we got here, and then the last form of manipulation, which either could be this, or it could be maybe if we resweep again and then get the longs, maybe we could sweep data lows. I don't know, but currently have this SMT, all these stacked asters. So that's how I was looking at the market the last couple days. But yeah, I just wanted to come on here and tell you guys to keep your trading simple. Don't look too into mechanical entries. You'll get fucking mechanical analysis, paralysis, all that shit. Like, oh, we have a 15-minute fair value gap here. We have a 15-minute value here. I don't know what to do. There's two 15-minute fair value gaps. What draw are we heading towards? Have we been accumulating? Are we ranging? Are we expanding? Are we manipulating? I want you to identify those things. So, first thing is going to be identifying a DOL, or multiple DOLs. And then the second thing is going to be, what is the market doing? Expanding, ranging, one of those two things, because manipulating would just be expanding just in the opposite direction. And then the third thing is going to be, how are we going to find our entry model? How are we going to find our entry? We can look for market sentiment, which is bullish at this time, to give us obvious draws, which is going to be previous week high, all the stacked highs. Then look for a protected DOL in the opposite direction, because that would take a lot to hit that draw. We want to see that setup, hopefully an A+ for your entry model or whatever, setup fail in that direction, then take a medium to low, or medium to high time frame continuation. That's going to be your highest probability setups. It's going to be when the market is expanding towards a DOL. You can look at this on the hourly time frame. I'll delete this. When the market's clearly just expanding towards a DOL, boom, lower highs, or higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher highs. Now we expect this lower or higher low, and then now we're going to expect a higher high. It's just simple. It's simple market structure. It's easier on the 15-minute time frame here. You can see, boom, boom, like this. Let me get rid of this. Boom. And then you could classify this as a lower low, but it's news, it's data. Boom, lower, higher, higher low, and then boom. And then obviously this low would be protected. We don't want to trade towards this low, so we can look for a good setup in this direction to fail, whether that's, you could look at like a 5-minute CISD, boom. When this setup fails, when do we get the CISD? Like right here. This setup fails towards this DOL. As soon as that setup fails, we start cooking in the other direction, and then boom, you could take your fib, whip that bitch out, take a continuation off the 0.618, off the 0.5, whichever one you want to do, and boom, now you're drawing towards that higher time frame draw, and you're in line with the daily, hourly, weekly bias. That's pretty much all I got for you guys today. I haven't posted on here in a while. I'm going to try to get better at posting on YouTube, because I have a lot of sauce with my newer trading style. Kind of, I still trade similar, but newer trading style, especially to you guys. So yeah, if you guys have any questions, leave them in the comments, join the Discord, it'll be in the bio. And yeah, later boys.